Good afternoon, everybody. This is Will from the Blacksmith Podcast, live on Discord on this wonderful Saturday afternoon. We're already 5 minutes past, so give people time to get in, and so we're going to kick this off. What we're going to start with is going to be looking at the stock market. So let me see if I we're going to look at what it did this week. So I'm going to share my screen with you here. All right, so now you can see what I'm seeing. So let's look at some of our favorite stocks here and let's see what they did over the course of the week. Okay, so I gotta talk about the elephant in the room, right? The first one we're gonna look at is Hood, Robinhood Markets, right? The platform a lot of new traders, I would dare say the bulk of new traders since about 5 years ago, 2020, um, have been on Robinhood. They've started on Robinhood. It's a great platform, but let's look at the past week and see what they have been able to accomplish. Oh, look, they started the week at $56, went down to 54, down again, 53, and then look, boom, on the 12th, shot up to $65, and right now is trading at 65.20. So 15, almost 16% in the past week. Um, it's almost $9, $8.90, right? That is a huge, huge spike. And one of the biggest things, if you weren't aware right now, first quarter, they're calling in their earnings numbers for the quarter, right? So the earnings call for quarter four 2024 just happened. And right here, you can see it. This is the CEO, and I don't remember if this is the CFO or the co-CEO. But let's look at what people were asking. Now, if you didn't know, if you're a shareholder of this company, you can actually ask questions when they're about to do their earnings calls, and they will actually, if it gets enough traction, they may actually answer your question, right? So let's look at some of why Robinhood ended up going up. So this guy Ali D said, he's a retail shareholder. He asked, when will the gold credit card be available to a broader audience? Now, if you're not aware, shoot, I don't have my wallet on me, but Robinhood brought out like a debit card that's green, and then they brought a credit card out this past year that's gold. Um, and he's just asking, when are more people going to have access to be able to own that credit card? So right here, Vlad Tenev, if you didn't know who he is, he's CEO and co-founder of Robinhood, right? And you can see that. Let me go back. You can actually see who the CEO is of every company if you just scroll down a bit. I always like to uncollapse to show more. So look, Robinhood Markets Incorporated is a financial service platform which engages in the provision of retail brokerage and offers trading in the U.S. and in U.S. listed stocks and exchange trade funds, so ETFs, related options, and cryptocurrency trading, as well as cash management, which includes debit card services. The company was founded by Vladimir Tenev and Baiju, don't even, wow, in 2013 and is headquartered in Menlo Park, California. The listed name for Hood is Robinhood Markets Incorporated, Class A common stock. All right, so you can see all of that right there. And then look, you can see Vladimir Tenev, that's the CEO. 2,200 employees, and they're in Menlo Park, California, founded in 2013. So all of that stuff is really important. If you're going to be a shareholder and part owner of the company, right? That's really what that means. So we got to start taking it more seriously. what it means to be a shareholder, right? You are part owner in that company, so you have to have a vested interest in the direction of the company. And it's very easy to do nowadays. If you didn't know, I'll give you a little history. Before about 2015 ish, before about definitely prior to like 2020, a lot of these trading platforms were not around. And what you had to do in order to buy stock was you had to have a portfolio. You had to have $20,000 cash, $20,000 in assets, or $50,000 cash to open between that number, $20,000, $50,000 in some brokerages to open a stock portfolio, or they just wouldn't mess with you, right? 5,000 isn't good enough. 500 definitely isn't good enough. They laugh at you, right? Their fees can be more than that. So if you didn't have that amount of money, you couldn't open a stock portfolio in a brokerage, right? So these platforms, we are so lucky as the common man, right, to be able to open a stock portfolio with nothing. You can just go on to Robinhood, set up your bank account and put all your information in, and they will give you a free stock, right? They give you a free stock to open a portfolio. And most people don't understand how fortunate that is. Stocks have always been a rich man's game. Why? And this is what we're going to talk about today. The other half, we're going to check on what the stocks were doing this week, some of our favorite stocks. And then we're going to talk about why it was always a rich man's game. And the reason being is because they can buy volume. Volume. So us common folk, we may be able to buy four shares of Microsoft at $400. That's $1,200. That's a lot for us. So when the stock goes up $1, you made $4 because you only have 4 shares, right? But a rich guy has 10,000 shares. So when it goes up $1, he made 10 grand. See what I mean? Rich man's game. All right, let's get back to this. Let's look at why Robinhood actually went up 15. If you're just joining us, we're talking about our favorite stocks of the week. We're going to track a couple of those and look at how they did. The first one we started with was Robinhood Markets, or HOOD, Hood. And in the past week, it went up 15.81%, up $8.90. And we're looking at why. So right now, everyone's doing their quarterly calls, their earnings calls for quarter 4, 2024. You can see it right here, their earnings calls. So we're going to look, and I was saying, if you're a shareholder, you can actually submit questions every quarter for any of the stocks that you own. So this guy Ali D right here asked, when will the gold credit card be available to a broader audience? And here is the CEO and co-founder of Robinhood's answer, Vlad Tenev. Thanks, Ali. Very soon. So thank you, by the way, to all our customers who have expressed interest and continue to express interest in the gold card. I have it, the blacksmith. The demand for the card has been extreme, and I think that's really been driven by the product experience. So it's not just offering customers great rewards with 3% cash back, which is good, by the way, if y'all didn't know. But the virtual cards and the digital features have gotten really amazing reviews. And we hear from customers every day how much they love it and how they can't believe other credit cards don't have these features. So today we have a little over 100,000 card holders. We're working to roughly double that number in the next few months. And that's going to be on the way to growing that multiples of 100,000 this level this year. So we love to move even faster here, but this is about the speed at which successful credit card programs in recent years have rolled out. So right here, he said a lot. Basically, he's saying right now they only have about 100K people who have that card. But that's why you have to pay attention, because Robinhood, maybe in 2023, ask people if they wanted to sign up. Can y'all hear me okay? I'm getting questions about the volume. Hopefully y'all can hear me okay. I'm looking at my OBS mixer. It's saying it's good. Okay, yes. Thank you. Thank you. Thank you. You can hear me. Okay, who else? Hold on, give me a pause. Okay, yep. You can hear me. And one person saying it's cutting out here and there for them. Read my lips. No new. No, I'm just kidding. I'm kidding. Who was that? Ronald Reagan? No new taxes. If y'all are even old enough for that to be funny, because you don't maybe not get it. But anyway, listen. All right, so I'm getting more they can hear me than not. I don't know. Try to restart your app or phone or whatever. If it's still working, I'll unplug and plug my mic again. But I'm here. I'm seeing more people that can hear me. All right. So he said a lot right there. Only about 100,000 people have the card so far, right? And it's a credit card. And here's the thing: if you know you're bad with money and you're not going to be responsible with it, don't even get it. You don't need it. It's not something you need. You can open it and not use it just to have the account open, right? To have $10,000 in credit that you're not going to use. Let's say you have $10,000 worth of debt in credit, and that's 50% usage for you. So your credit score is going to drop lower because you're using more credit. But let's say you open this up and they give you a 10 grand limit. Now you have $30,000 worth of a credit limit total, right? And now your usage drops from 50% to 33%, right? So your credit score will go up a little bit because your usage went down. That's a Blacksmith podcast exclusive right there. But anyway, that's actually a very advanced tip. So I hope y'all appreciate me squirreling a little bit and getting sidetracked. Anyway, so basically what he's saying is they're gonna try to get that card out to a couple 100,000 people this year. They got 100,000 people that have it, and they're gonna try to maybe 200,000 or 300,000 issue it out to more people. They love to move faster, but he's saying successful credit card companies rolled out at about this rate. So don't rush perfection, right? Haste makes waste. That's what he's saying. He said, I think it's just as important to balance the speed of rollout and satisfying the demand with being incredibly prudent regarding the spending and borrowing activity. Right. So he's not going to give that card to more people than they can handle, right? So now he asked Jason Warnick is the CFO, the chief financial officer. Okay, that's who I thought he was. All right, so he said, yeah, I just say, Vlad, you and I have both heard Ravi, who runs credit at Robinhood several times, saying how important it is that we be cautious in the short term so that we can be ambitious in the long term. And I think we're striking the right balance, but obviously we want to move as quickly as possible for customers. And then Vlad came back, and it's rollout increasing, the rollout's increasing, so hopefully you'll get one soon. So here's the thing about that, right? If you didn't sign up for that Robinhood Gold card when they announced it, because they announced the debit card, and you had to be like one of the first 100,000 people to sign up so you would get it first. Same thing with the gold card, then you're going to have to wait. So if you haven't signed up, go in your app, look in your settings, and you can sign up for that credit card and get on the list for it, and you'll get approved, with your spot in line for where you requested it. They will take a look at your credit and figure out if they're even going to allow you to get it. If you got bad credit, don't apply for it. Robinhood is not they're not granting you money. This is borrowed money. All right, let's look at the next question. This is another reason, if you just joined us, we're looking at some of our favorite stocks over here, some of our favorite companies, and how they did for the week. So Robinhood went up almost 16%, which is about almost $9. And we're trying to figure out why. They did their earnings call for quarter 4, 2024. All right. And you can see the call was held on February 12th. And I forgot to say this, you can actually play back the whole recording. So they will, what's in this recording, if you've never listened to earnings calls before, they are going to, the chief financial officer here and the CEO, they're going to talk about what the company has done in the past quarter, how much money they've earned, how much debt they have. They're going to talk about all the numbers you see when you scroll underneath the stock. And then they're going to tell you the direction the company is going, right? So, and they owe it to you because you, being a shareholder, are part owner of their company, and you got to take it seriously. So I would definitely caution you, if you are a shareholder of Robinhood, play this recording back and listen to what they're saying. It'd be best to take notes, right? We are investing our hard-earned money. I don't know about y'all, but I work hard for the money, as the song suggests, right? And most people are paid hourly, right? So we are trading time for money. I'm on salary, but that's even worse sometimes, because you can get a call at 2 a.m. when you're not punched into the clock to get up and handle something, right? So just understand, we're trading time for money, and our time is more precious than the money, but time equals money, right? So you have to be vested in what these companies are doing. You should be interested more than you want to scroll on Instagram, more than you want to laugh at TikTok videos. You don't need to be laughing. You need the other L. You need to be learning. Listen to these calls, the other L, the other L, listening and learning, and really understanding the direction of the company. Squirrel. Now let me get to the next one. We're going to do about 3, and then we'll look at another company, okay? Chat, how we doing? Anybody? Chat, if you want to know something specific, go ahead and ask it in here. Basically, what we're going to go over, we're going to look at a few of our favorite companies and see what they did for the week. And then if they've done their earnings calls, we're going to look at maybe like 3 or 4 of the questions. And then we're going to go over buying volume, centering in on a couple of companies that we believe in, and buying volume over having a crazy diverse portfolio, okay? Having like enough stocks that you can roll that old scroll of parchment down the King's Steps and out the door and list off all of your companies you have, but you only have 1, 2, 3, or 4 shares in them. And we're going to talk about why that's a bad idea. All right, so Alexander B., a retail shareholder, asks, will Robinhood offer the ability to do deeper analysis on individual stocks within the app? Now this, I'm going to tell you, this guy right here takes being a part company owner very seriously, because let me go back. Let me show you something, right? I should have just hit the back button. I said, let me go back, and then I clicked home. Anyway, so what he's talking about is do a deeper dive. See all this stuff right here? This about information about the company, the CEO, the number of employees, where they're headquartered, and all of this, when it was founded. Put the CFO here, the chief financial officer. Put the vice president on here. Put the other founder, right? Vlad Tenev, I know about him only because he's been on Earn Your Leisure's platform 2 times. And I know the second time he showed up there, he was a billionaire. I think he said he was, or the company, yeah, he was worth about $2 billion because of this company. But he told his story. If you haven't seen it, go on Earn Your Leisure, or just go on YouTube, do EYL space Vladimir Tenev, put his name, and it'll come up. Both interviews, very, very interesting stuff. This guy's first gen American, and he was an engineer. He had an engineer background, and he had a friend that they had an idea, and they just did it. It's funny how that works. Anyway, he's asking to put more information here in the about and the key statistics and stuff, because that's going to help him know at any one point in time the direction of the company, and should he buy more, buy less, sell, or whatever, right? So this guy is taking it seriously. Now let's go back and read the rest of this question. Um, will it have charts for financial data over time, such as revenue, net income, free cash flow, etc., and have a feature to compare company metrics versus other companies? See what I mean? This guy's taking it very, very seriously. What he's basically asking is, will you on your platform give us the ability to do more research and spend less time doing it? So what am I talking about? So let's do one that I talked to my brother about earlier. Can I look at Nvidia, which is a tech company, right? And while I'm looking at Nvidia, hit compare and put in Microsoft, and half the screen is Nvidia and half the screen is Microsoft. And now I can take two tech companies and compare them and see which one is the better buy. That's what he's asking, right? He is asking something that is extremely important. Understand that. He's talking about free cash flow. So a lot of companies are in debt, right? And you don't know this, but unless you research it, listening to the earnings calls and stuff, net income, revenue, and stuff like that, he's trying to find out, are you in debt or do you actually have cash reserves? Because if you have cash reserves, then you are doing much better than companies that are in debt. So this guy takes it seriously. And look, he's got 1.1 million shares on this and 873 votes to go over my question and answer it, please. That's what that is, right? So I see why they answered this one. And then the credit card had 1.7 million. Anyway, so Vlad says, yes, thank you. I recognize that, Alex B. Congrats on having the 2 of the 3 top voted questions. See that? He even got recognition for taking it seriously, right? In short, yes, one of our goals is for Robinhood to have the very best information, research, and tools in app, right? So he says, then where am I at? Sorry, I had to expand it. Here we go. I think we started out offering the best service for you to actually place the transaction. He is right. Basically, he just said, without making this rap beef with other platforms, he said we were more user friendly than TD Ameritrade. What's that other one? Webull and all the other ones. He just basically said we are more user friendly. Okay. And over time, we've been moving more upstream. And the goal is to not just be the best place to complete the transaction, but also the best place to do your research and generate ideas. Why does he say this? Anybody who runs a platform, I don't care, social media is probably the best example of this. Social media, do you want somebody to come on Instagram, but have to leave Instagram to do something that if you just put on Instagram, they could remain within the app and have all those features there? Because if you have 2 or 3 good features they like, but Facebook, which they own both, but get what I'm saying, TikTok has another feature where you can do something else, then why wouldn't they just go to TikTok because they have all these features plus these? So he's saying they started out being more user friendly and over time gotten better. And the goal is to keep you in the app by becoming a one-stop shop. Guys, I'm gonna tell you like this, all right? I told one of my brothers, and he's watching right now, I told him earlier, I'm going all in on Robinhood. That's me personally, right? Because I've paid attention to the trajectory of the company. I've looked and paid attention that since 2020, when COVID hit, Robinhood have probably had more new users than anybody. They were user friendly because I had some more of the the more different platforms. I had my money spread out in different portfolios on different platforms, and they were more user friendly. I couldn't figure out heads or tails about Webull, and maybe I'm stupid. I'm not talking bad about Webull. You ain't gonna sue me. I didn't say Webull sucked. I couldn't figure it out. See how I worded that? I put the blame on me. So here's what I'm saying to y'all. To me, they were more user friendly, and I'm more where they're going. I like that, and I think they have a more sustainable um, direction, a more sustainable. Now I'm all tongue tied, but they have a more sustain. They're good where they're at, and they can sustain where they're at, and the direction where they're going is awesome. I'm all in on Robinhood. All right. So let's get to through the rest of this. All right. So he says over the past year, we've really been focusing on furthering that across the charting and technical analysis experience across the products. You've seen that with Robinhood Legend. Pay attention to this one because this one came out a couple months ago. Um, you've seen that with Robinhood Legend. I need to use my cursor, folks. I'm sorry. Which, as we mentioned earlier, is already up to $50 million annualized revenue rate just after a few months. So we've been focusing on making the charting experience really, really good. Customers are now asking us to bring that into mobile, and the team is continuing to execute, constantly shipping new features, but there's more to do. So right there, he's saying Robinhood Legend, which is the trading platform they created, that helps you do faster transactions, a bunch of stuff. They actually have this call. I was in on this one. I was driving home and I got like a 2.5 hour commute sometimes home. So I pulled it up and just listened to it, and I was blown smooth away. They brought up their developers, so like software engineers and whatnot, and was just showing everything this thing could do. And I'm telling you, this company is really, it has made waves and it's really innovating, and it has a very sustainable model, which is what I was trying to say earlier, model. So basically what they're saying is that there's more to do. There's more innovation to be done. So they're not a company, and this is why you should care about this. They're not a company that's saying we're good where we're at. We're just going to stay right here, because I'll let you know something. Intel did this, right? Intel was top of the mountain at one point in time. Everyone had the Intel Pentium processor, and military contracts, government contracts, you name it. And Intel right now is sitting rock bottom because it's a lack of innovation. It's a lack of ideas and drive and vision for the future. Whenever you think I'm the top dog and can't be touched, somebody else is working out more than you. They're eating more than you. They're going to grow bigger than you, and they're going to come knock your block off. And so you should really, really care that they are talking about innovating, and they're innovating. All right. So let me see. Customers are now at, oh, I already read that. You mentioned fundamental analysis in some of these more fundamental indicators. Those are on the list as well. There's plenty more to do. So he's saying yes to everything you ask. We've got it, and it's coming. And the team is on it. We're excited to share more later this year at the Hood Summit, which is our active trader event. Be there or be square. Blacksmith speak, be there, be broke. All right. I'm being facetious, but you get what I'm saying. I see. Oh, chat. Here we go. More sustainable user interface and statistics to help you understand and digest the information. They even do simple training to teach you what stocks and options are. Bam. Look, chat, you're on it. Somebody in the chat hit the nail on the head again. They are trying to become a one-stop shop. They don't want you reaching outside. So one thing I showed you before, right, when I was showing about why you should invest in REITs, real estate investment trusts, because they pay big dividends, right? One thing that I did do is I went to NASDAQ. I Googled NASDAQ. I Googled like earn, EARN, dividend history, and NASDAQ came up, and I clicked NASDAQ, and it showed 96 cents annual dividend rate, which if you break that up by 12 monthly, that's 8 cents per share per year, right? So they want all that information inside Robinhood. So you don't have to go to NASDAQ, because if you go to NASDAQ, there may be another app that you might use. One-stop shop. That's how you keep your customers. Does all that make sense, chat? Do y'all have any questions so far? I'm going to read one more. Let's see if there was a CFO on this one too. Nope. So Alexander B had another question, and he just said 2 of the top 3 questions. He called him out on it, which is awesome. Look, this should be us right here. This should be us. Let's get out. Look, before they do their next earnings call, this is one of the blacksmith's favorite stocks right here. And I'm not just talking stuff, right? I'm going to show y'all. I actually do this in real life. So right there, you could see that I had to stop, but I'm not just talking stuff, right? This stock is trading at 65.20. Look, the market value in my portfolio is that, right? Here's today's return, but I think this was yesterday because it's a weekend, right? Total return is this. So what does that mean? If you subtract this from that, it equals how much I put into it. So I only put like $6,000 and change into it and earn 16,000, almost a 250% return. Got 355 shares, and it's just 22% of my portfolio. So I'm not just talking stuff, folks, and I'm showing you, and I'm not flexing either. I did that at the gym this morning. I'm just playing. Nah, I'm serious, but I'm kidding. I do this in real life, and I really want to help y'all do what I'm doing, because I'm just an average guy and I'm just a dude that cares, right? The whole point of this platform, the Blacksmith Podcast, is to teach the common guy how to do things that they should care about, right? Investing in stock, classic manhood, getting hard skills, soft skills, budgeting, investing, all that kind of stuff. I want to be a one-stop shop. I don't want anybody going outside the blacksmith to learn how to trade stocks. I'm not the best at it, but I want you to like my personality. No, I'm just kidding with y'all. All right, let's go back to it. But if you're a one-stop shop, hey, your customers don't go elsewhere. Y'all ain't my customers. Y'all are aspiring blacksmiths. All right. Alexander B. He says, will Robinhood offer loans? Oh, yes. I read this before. Okay. Will they offer loans such as microloans, auto loans, home loans, and even small business loans? Folks, pay attention. Jesus Christ. I didn't have one for this one, but y'all see what I'm saying. What is the timeline for these types of offerings on the Robinhood roadmap? This dude I'm telling you, this guy cares. This guy, look, low key, this guy probably works for them. And he probably is asking, I'm just kidding, but he actually cares. So over the long term, the company will, this is the CEO's response, right? Over the long term, the company will, he's saying they will. So yes. The company seeks and aims to fill all of our customers' financial needs. One-stop shop. I'm telling you, one-stop shop. All right. Hold on. Let me see. Chat, did y'all say something? Something moved. Maybe somebody jumped out. Maybe that's what it was. Sorry. Let me go back to it. All right. So one-stop shop. So we want to be the place where you can buy, sell, or hold any financial asset and conduct any financial transaction. And that's a big part of our second arc, which is being number one in wallet share for the next generation. So basically, they're trying to not just have us, I'm 38, they're trying to get our kids. They're trying to get our kids on investing early, and they want to be the platform that most people are investing in for the next generation. So of course, lending needs are a big part of that. Okay, so what does this mean? That means that it started as a trading platform for stocks, right? And now they're moving into being a financial lending institution. Folks, understand why I'm picking Hood as my champion stock. Okay. Nvidia's trading, it's valued more, but see the future. See the future. And this is the future. Okay. You ain't got to listen. You don't have to listen to me. You can go listen to whomever you want. But remember, the blacksmith told you here first. They've got a sustainable model. They're moving from being a trading platform that's just offering trading services to 24-hour trading. They introduced like 1,000 stocks that you could trade 24/7, right? They put crypto on their platform when other platforms did not have crypto on there, right? They were spearheaders and went ahead and said, no, we'll let you trade crypto. And they've increased the amount of crypto they've let you trade. And they keep doing it. Now they're moving to be a financial lender. You guys got to see that this is amazing. So, of course, lending needs are a big part of that. Customers have borrowing needs, and they're saying exactly how he said it. And we're going to address that in a number of ways. So first, we've been focusing on the margin product. So a little bit under, I guess, a year ago, 6 to 7 months ago, we revamped our margin offering. Yes, they did. The blacksmith trades on margin. And we started offering industry leading rates. Since then, the margin book has more than doubled. So if you don't know what they're talking about, well, let me read the whole thing. So we've really made tremendous progress there. Even after that doubling, we've got a long way to go. Being competitive in terms of size with some of our incumbent competitors. So I think margin has a lot more room to run, and we're going to continue to invest there. So margin, basically, if you have, let's say, $5,000. First of all, you have to be a gold member, so you have to pay at least $5 a month. Robinhood is a free to trade platform, but if you pay $5 a month for the gold membership, they give you some perks, and one of the perks is trading on margin. So if you have $5,000 in Robinhood invested or in your buying power, they will double what you have and let you trade with some of their money. It's kind of the reverse of what a bank does, right? The bank will allow you to put your $5,000 in the bank. Let's say you want to put it in a savings CD, right? Or savings certificate, as they might be called, or you might be used to them being called. They'll let you do that and lock that money up. And you know what they're doing? They're using your $5,000 in the stock market, trading it with companies. Like they'll put it in Nvidia. Nvidia goes up $1. They have, I don't know, let's say they put it in SoundHound, that's trading around $10, right? And they can buy 1,000 shares. I'm not doing good math here, but just get what I'm saying. It goes up $1 that week, and then they put your 5,000 back because when you want to draw it out, it needs to be there, right? But then they take the money they earned off of it, and you don't see none of it. See, with the money you have in there, they're just giving you their money to trade with, so you can actually earn more money off of the money they're lending you, right? So that's what he's talking about, lending on margin, so you can actually, and I trade using margin. I sure as heck do, because, oh, you're going to give me more money based on the money I have in there to earn even more? Oh, I got you. Don't even worry about it. All right, on the credit card side, which as well as a lending product, we've been making tremendous product. The loan book has been growing, and as we get more and more customers onboarded. As you guys know, we've got a lot more customers to go. They're trying to get everybody. They're trying to take you from TD Ameritrade or E-Trade and put you over here. They're trying to get you away from Webull and get you over here, is what he's saying. So our focus is on nailing those two products, which obviously have a sizable lending component. But once we do that, you should expect to see us cover the wide range of customer borrowing needs. So I encourage you guys, once again, Robinhood Gold customer event in March is going to be exciting. Look, folks, it's February 15th. You know, we only have 2 more weeks to the rest of this month. It's not even a full 30 days. So let's get it. If y'all don't know what he's talking about, then you need to get on Robinhood and scroll through here and start clicking these hot links and find out what he's talking about. If you're going to invest with this company, then you need to know everything this guy's talking about. You can't be more excited about One Life to Live if you're in the soap operas. You can't be more excited about fixing up your Honda Civic outside, because that's actually a liability, not an asset. Now, if it needs to be fixed, like your motor is on the ground, that's different than putting on a turbocharger. That turbo money could be getting turboed in the stock market and giving you the gains instead of giving you a higher gasoline bill. So anyway, just understand, if you're going to invest, you need to be interested in knowing what the heck is going on. So it's already 12:47 by my watch. So look, this is Robinhood. This is one of my favorite accounts right here, or companies right here, and I actually invest in them. And this is how you look over the earnings calls, and they give the top 3 questions that was asked. And look, they even go over what is an earnings call. They have a lot of stuff on here, folks. There's no reason for us to be ignorant on what we're doing in the stock market. But I fully expect y'all to take what I'm teaching you on Saturdays and go in and do this stuff, because people always say knowledge is power. And I used to. I had a saying even when I started the channel: knowledge is power and knowing's half the battle. The blacksmith. And I'm going to take that back. Applied knowledge is power and knowing's half the battle. If you don't apply the knowledge, it's not powerful. You just read a book. Great. What did it benefit you? Nothing. Okay. Now, let's go over the other part of what I wanted to cover today. All right. And that is volume, right? The great, not yet late Warren Buffett. I quote this guy all the time. He's 94, unless his birthday came, but he's 94, and he's the greatest investor of the last, he's 94. So 4 generations, a generation is 15 to 20 years. So you do the math, right? He's the greatest investor. Well, I don't know if he was investing that early, but let's say the last 3 generations at least. You get what I'm saying. And his theory is this. Not even his theory. His advice is this: do not have a portfolio that's 67 companies long. And I said portfolio. So it's not something that's on a watch list. Portfolio means what you're invested in, right? What you have money tied to. It shouldn't be 67 companies long. You should figure out your favorite 3 and concentrate your investments in those 3. So basically what he's saying, if you don't believe in them enough to give your last 10 grand, then you shouldn't be in it. Don't have 2 shares over here, 3 shares over there, 15 over here, 20 over there. No, you could sell those and go 48 stocks into this one, right? And let me give you an example, okay? So you can see all my stuff's down the right-hand side. These are options, so this is totally different, right? And so Alpha Delta, he taught the class on options a couple weeks ago. If you missed it, he said he might give it again in a month or so, but we got to give him a good heads up and give some time so all of that stuff should set in. I posted that video. I got to get better at doing chapters. I know, but I'm new to this social media thing. I'm trying to get better at it. But let's look at my portfolio. So if you count them 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, lem, not 11, lem, L apostrophe EMM, 12. All right. So I have 12 companies that I'm investing long term in, right? And I can explain every single one of them, right? Now you already saw Hood was what, almost 23% of my portfolio. Hood is a trading platform, right? But remember, Hood is now going to be a lender, right? They're talking mortgages. He said yes to all of it, right? So remember, it's a lending, it's a trading platform. That's the only one of those that I have. So I had it in a category of its own. So in that sector, that's the only one I have. All right. Because I really think they're leading the way in that way. We're gonna skip this one. Microsoft was free for and look, I have a tenth of a hundredth of a share. This was free. So I'm just never selling it. This was for recommending 5 people that actually open accounts. They gave me that. So I'm keeping it. So I'm not invested in this. In fact, if you look at this one, even if it went down, it's all profit for me because I spent nothing. Okay, so PSEC. Nope, skip that for now. NVIDIA. NVIDIA is a tech company, right? Now, NVIDIA specializes in like chips, AI, data centers. So NVIDIA, look at how many shares I have of NVIDIA, right? We don't even have to click and go into it, but let's do it. We don't have to, but let's do it, right? NVIDIA is trading at 138. So look, again, I don't just talk stuff. I'm invested in this stuff. This was Friday's numbers, right? This is the total return. So I put a little more money into this one than I did in Hood. But if you notice, the price of Hood is still 2 digits. This one is 3. And this one got up to $1,200 before it split. So understand, NVIDIA has been going crazy, right? The average I spent on each share is this much. And look, this is the amount of shares. And look at the portfolio diversity. So right there, right, my top 2 companies that I believe in, I'm in 50%. 27 with this one, point something, and 22, high 22.8 something. So just over 50% in the top 2 companies in my portfolio that I believe in, and they're not competitors. I almost said Microsoft, but again, that hundredth of a share was free. So I'm not investing in Microsoft and NVIDIA. They're competitors. In the tech sector, I have one giant that I'm investing in, just one, right? So let's go back. And this is what Warren Buffett was talking about. So in trading platforms, that's my one. In tech companies, that's my one. And then, all right, so now tech. I was flirting with Palantir, right? So NVIDIA is jealous. Palantir is up to 118. Now, here's the thing about Palantir. I heard about it towards the end of last year. And because I was trying to do what I'm telling y'all right now, I had only bought 1 share and then I bought 2 more. And look, it wasn't a bad buy. It's up, it's quadrupled, right? I've earned some money, but it's only 3 shares. You see, had I gone all in or had I bought 100 shares, imagine it would have the same percentage, right? But the number right here would be different. Maybe your top tech stock is Palantir. That's not bad. Just go in on it, right? Don't just have 3 shares. All right. So Palantir is a tech stock. They do a lot with defense contracts or whatever. And now you'll see some randoms here. Now, these are quantum computing stocks. No, these 2 are. And my brother put me on to this one. It ain't doing so hot, but these 2 are competing. So NVIDIA and I think SoundHound AI. This is also a tech stock. So I'm sorry. So this is another one that I haven't completely committed to going all in on, So look, it's only 5% of my portfolio. Yes, it's 500 shares. I got them at an average of $8.10. And look, this is what it's worth. It's only got a 34% return. Now, with SoundHound AI being so cheap, if you wanted to pick this one because they're making a lot of innovations in AI and whatnot, you could pick this one. Nvidia was invested heavily in the SoundHound, and they just sold they liquidated their shares and took that return, and they're going to use it now for profits, right? So SoundHound is still pretty low. If you believe in SoundHound, you can get a grip of them for very cheap. I like SoundHound. I have options on SoundHound actually. So, but remember, just have a focal point. Now, let's talk about some of these other ones I didn't talk about. Uh, so SoundHound kind of would be a competitor for Nvidia, but not even close. This is the number one in the tech sector, and it's not close, right? I would say because they're in tech, but their specialty is chips, right? AMD would be the next one, and AMD is struggling right now. SoundHound just started being talked about like the last quarter of last year on the news and in articles and stuff. So SoundHound is making noise, but very little. It's like a little mouse squeak. Nobody knows SoundHound right now. So if you wanted to get in and you wanted this to be your champion, make sure you go and look at their earnings calls, look at the direction of the company, see if it's a sustainable model, see if they're in the negative or if they're in the positive, if they have positive cash flow. What are they invested in and what is their direction? And that could be your champion, and it'd be cheaper than mine. And when it went up, you would see a higher percentage increase, but go all in. So I'm flirting with these two, right? And in quantum computing, these are the two. But some of these tech companies are starting to also get into quantum computing. And the reason they're doing that, again, one-stop shop. So if you're just in chips, if chips ever, if there's some reason you couldn't get your shipment of chips or something, you're only single faceted, you're gonna fail. But if you're also in AI, now you have chips and AI. If you're also in chips, AI, and quantum computing, now AI is the future. Most people don't even know what AI is right now or how to utilize it, and they're not smart on it, right? And quantum computing is the new kid on the block that is still small right now. So is AI, but it's bigger than quantum, right? So there's two things they're into that is the future. So think about that when investing. Now let's talk about Earn, PSEC, ARR, and Orchid. These are all REITs, real estate investment trust, right? So they are companies that pay high dividends. They are companies that pay a huge dividend. So I'm chat. Sorry, I have not been looking over here. Let me get at this in 1 second, but I opened it. I see it's there. So these companies pay a huge dividend every month. So like this one, for instance, Armour Residential REIT, ARR is the ticker. You can see it right here, right? This is the market value if I sold it today, and it's 392 shares. It's only 7% of my portfolio, right? It earned $66 on Friday, and overall I've taken a 2% loss on investing because I bought it higher than what it's currently trading at. I don't really care about that, and I'm gonna tell you why. Look at the dividend I'm gonna get for this month, $94. That almost covers what I've lost already, and that's not the first dividend I have gotten from this stock. I get dividends like that every single month from this stock. So I've earned more with dividends than I've actually lost overall with the stock. It's not an equity stock, it's a dividend stock. So there's a difference, right? So I've got a lot of shares of these REITs, and I'm going to keep investing in REITs. But the great thing about REITs, like Earn right here, right? 997 shares. When you buy these, it's like buying a self-sustaining engine that repairs and builds more cylinders and stuff. It grows as as time goes on, right? So like with Earn, if I sold it today, it's worth almost $6,500. I've only earned but a percent and a half off of it for the total amount of time I've had it. And I first bought it in 2021. It's only 6% of my portfolio, and that's how many shares I have. And look at what it's trading at. Super cheap, right? Why do I buy Earn? Because you get 8 cents on every share, and that is per month, right? So it's I almost have 1,000. That would be 8 cents, right? That would be $80, right? So look, I'm at 79.65 for February. So that money is going to reinvest into Earn and buy more shares. I'll be over 1,000 shares next month, and I'll be getting 80 something dollars a month in dividends. So, and this is by me putting no more money into it. The money I put into Earn every month auto invests from the dividends. So it's again, it's like creating a machine, a self-sustaining machine. Does that make sense for everybody? Chat, let me get to you now and see what's going on. You're guessing the cards are to help test the interest in becoming a bank. The gold cards, yes. So that's why I guarantee you that's why they started. Okay, so I'm sorry. The chat asked a question about Ramza. He asked a question about he's guessing the gold cards are a way for them to dip their toes in the water and figure out if people are interested in them becoming a lending institution, or if they're interested by issuing those cards and becoming a lending institution, and how it works. Yes, yes. So you don't just say, we're now going to be a lending institution, and you just throw a bunch of money out there for people to borrow. No, that's why they only started with $100,000, 100,000 cards, right? And then they stopped. They stopped for, I don't know, 6 months giving out those cards, and they trickled those in. They didn't just do 100,000 at once, because when you lend the first 1,000, people are going to start using it, right? Well, you got to tell them their limits. You got to tell them the perks. You got to see how they're using it. And then you trickle out some more. Then you trickle out some more and see how do you handle the debt that they're incurring, right? And how fast they're paying it back. What can you do to subsidize the debt? What can you do to, yes, they were dipping their toes in the water in order to see, in order to move towards becoming a lending institution. Chat, y'all got anything else for me? I was going to look at 3 companies and their top 3 questions, but that took a while because there was so much information. I can move faster next time through it. But there was a lot of information. Hopefully I didn't flood you guys with too much. I could look at another company real quick. Let me see. Let me see if SoundHound. Let's see NVIDIA. Let's go top 2 stocks. Y'all see what I'm invested in. I don't play around. I don't know if they did their earnings call yet. I'm not sure. I don't see it up here. Let me see. See, now I got to do, they're not a one-stop shop yet. NVIDIA earnings. Actually, for this, they are. Their earnings call. Oh, that's why. Because their earnings call is scheduled for 11 days from now. That's why. They haven't done their earnings call. All right, fair enough. I mean, but usually they put upcoming earnings call on here. I don't know. Let's see if SoundHound did theirs. So when NVIDIA does theirs, we'll go over their earnings call. Let's see if SoundHound did theirs. Now, every company has to do earnings calls, folks. If you did not know that, they owe the investors information about how the company did, um, and the direction of the company. And they want to do earnings calls, believe you me. Yeah, I don't see SoundHound didn't do theirs either. So that's really the only one I could show you right now. But hopefully everybody got something out of this chat. If you got anything else, I'll wait a couple minutes to hear it. But if not, the blacksmith is going to go ahead and close up the forge. It's going to go cold. So ask your questions. Give me questions, comments, concerns, whatever you have right now. We'll do a last call. And then we're going to close this forge on up. Y'all want to look at a crypto? Let's see. XRP. Has anyone used chat to try to make? I don't know what that is about. XRP. Now, one of my brothers is heavily invested in XRP. And interestingly enough, and I'm pretty sure I'm right when I say this, but XRP is the only centralized, how do you show less or more and it doesn't move? How silly is that? It's the only centralized crypto out there. So they actually have a company structure, whereas the other ones, you don't know who created it, where it's based out of. And don't get me wrong, I believe in crypto. I believe the crypto is the future. Teaching Wellen. I'm just kidding. I'm going to stick to my day job. But I've actually earned a lot of money on like Dogecoin and even Bitcoin and Ethereum. I don't have it now, but I earned my money and I put it into actual stocks. Has anyone used chat to make a stocks learning machine? What do you mean by that, Ramza? What are you talking about? Use chat like GPT to try to make a stocks learning machine? Is that what you mean? Dang, I wish I could show. Let's see if Microsoft did their earnings call. Because some of y'all might believe in Microsoft. I do too, but listen, you got to go in on something and look at how much Microsoft costs. You know what I'm saying? The way my bank account is set up. Man, no one's done that. Who else has done earnings? You know what? Maybe next time I will have an earnings call, more earnings calls for you, but next week, NVIDIA still won't have done theirs, but when they do theirs, we're going to go over theirs. Yes. Ramza's asking, has anyone used ChatGPT to make a stocks learning machine? It essentially will look at every update in news and also trading strategies and signals for you. Well, that would be amazing. And I think with the and advancement of AI, that is where things are going for the stock market and for like everything else. However, I will say this, because of what you said in here, if it's on the news, folks, it's too late to get in. It's too late to buy low, right? When it's on the news, it's time to sell because it's at a high. The news typically doesn't talk about a stock unless it's booming, right? Or if it's failing big time, like if it's plummeting. But there's a difference in the stock going up and investors could be people, it could be businesses, right? And other lending institutions like NVIDIA had SoundHound AI stock. And when SoundHound went up $15, $16, they sold all their shares and pulled out all their money, which people found out NVIDIA pulled out. And what do you think they did? Then they sold their money. But now some of you bought in at $13 and you sold when it went down to $11. You just lost your money. That's dumb, da dum, dum, dum. Buy low, sell high. Don't freak out because you heard a company or Kathy Wood or Warren Buffett sold their shares. They're selling their shares because they're in it for the short game. They buy the shares low, they talk good about it on the TV and let the press know that they've invested in it. Why? Because their name rings bells. If they say, hey, Will, the blacksmith, he just invested $2,000 into NVIDIA, they're going to be like, yeah, dude, kick rocks. Who the heck am I, right? But if they say Warren Buffett just invested $2 billion into NVIDIA, you know what everybody does? They run out and start buying NVIDIA, which does what? They're more than Warren Buffett, right? They're way more people than him. So the amount of money, a lot of the average people, they could drive that price up, right? So let's say they drive it up 20 bucks. He sells his $2 billion and takes that times 20 and run with the profit. And then when they hear he pulls out, then they sell theirs too, but they might be upside down. Stop doing that. If you believe in the company, you see all this red right here? Let me see what Microsoft has done. No, it only went down $1 in the past week, 3% the past month. Give me something better than that, 4% for the year. All right, somebody's playing some ratchet music outside. All right, so right now, I'm looking year to date, right? So since January, they're down $17, down 4%. Now would be a good time to buy because that's a 4% sale, basically. When you see green, let me deal with the red. When you see red, that's like those prices in Target when you walk by and the price tag has red saying on sale 15% off or $2 off or whatever. That's what it is in the stock market, right? So pay attention to a couple of different factors before you do that. So right here, the 52-week low is 385.58. Well, it's 408. So it's only about $23 from its 52-week low. That's good. Because the 52-week high is 468. So it's $60 from its 52-week high. So this would be a good buy. It's a higher percentage away from the 52-week high than it is from the low. If it's closer to the low, and you know Microsoft isn't going anywhere, they are a company that innovates. They're not like Intel. What Microsoft does that a lot of companies started doing, right? Microsoft has been around since what, the 80s? 75, okay? So it's been around since 75, right? What they do, instead of trying to develop into a company that does everything, they'll look at the next sector. Like AI is the future. Okay, let me look at an AI company that's doing things that we like. They just don't have the funding and they're not as big as we would like them to be yet. And we're going to acquire them. We're going to go buy that whole company. And that's what they do. And now Microsoft has an AI sector. Does that make sense? An AI department, because they acquired this whole business and now they are in AI because they acquired it. That's smart because if hey, money talks, right? He who has the gold makes the rules. There's the golden rule. And it's just smart. Don't try to get your employees to do everything. Y'all specialize in this. This is what the company does. Oh, we have a big purse. Who's over there doing something that's futuristic? Let's acquire you. Now we have another division that does something else. And that's what Microsoft does. But again, when you see nothing but green, I'm going to warn y'all against this. I have to say this. I'd be morally remiss if I hung up the phone without saying this, right? You see green for the today price, right? You see green for the past week. You see green for the past month, 43% in the past month. Past 3 months, it doubled, 103%. Year to date, 69 since January. Past year, one whole year, calendar year, right? 368%. That's not dollars, percent. And past 5 years, 71.58. So Robinhood literally is green across the board. Let's look at what I just showed you. The 52-week low is 1304. This company's not going to touch anywhere near that again unless they do a stock split. Like when it gets to $100, if they do a 10-to-1 stock split and now each stock is $10, shit, I buy. But 52-week high is 66.91. Well, it probably hit that in the past week or two. Probably in here somewhere. I don't know. But so if it's near the 52-week high, should you buy? No. No. Would you go to a car dealership and they have a Jeep Wrangler on the lot? I don't care if you like Jeep. That's not the point. $30,000, 15% markup. If they have it on the window, would you buy that? No, you wouldn't buy it. I'm not paying 15% more than it's actually worth. But if they had, if they had $20,000 on the window and they had a 33% discount on it, well, so then it's actually supposed to be 30 grand. First of all, I wouldn't just jump on that. That might be a grenade. I ain't jumping on a grenade. Listen, what's wrong with the car? That's my first. But you get what I'm saying. A 33% off sale, you jump on that. So that's what you want to do. Take that 52-week high, look 20, 30% off of that and buy it there. You don't buy it when it's high. Let's get this calculator going real quick. It's at 66.91. All right, so that means if it dropped back down about $53, that'd be a good buy. That'd be, what I do, 30%? That'd be 30% off. Look for sales in the stock market like you would look for in the grocery store. And if you don't grocery shop, look for sales in the stock market like you would look for on the car lot. And if you don't buy cars, get the point. All right, that's all I got, folks. The Forge is going cold. Thank you for joining me today and tuning in this week. Sorry for last week, but family called. Forge is going cold. Look for some shorts. Look for some long form content this week. I am on vacation time this week, so I will be off. I'll be handling family stuff, but I also will. I will be doing some long form content this week. Somebody's hit me in the chat. Last thing, because I got to go. It's saying somebody hit up ChatGPT and they ask it, could they build a stock scanning system? It says, yes, I want this build. Oh, no, that's him. I want this built and constantly running to give me suggestions on to buy and sell. It says I can build a stock scanning system that continuously monitors market conditions and provides buy and sell signals based on your chosen strategies. This system would, 1, track multiple trading strategies, trend following, breakouts, mean reversion, etc. 2, use real-time data to identify opportunities. 3, provide alerts or reports when signals are triggered. Or 4, adapt over time, improve performance. So basically what Rams is saying in the chat, yes, you could use GPT to help you out. And remember, AI is the future, folks. So people are going to be utilizing AI to automate a lot of different systems. Remember, AI is replacing us in the job market, right? Especially unskilled labor. If you're a cashier, self-checkout has been replacing you since like 2004, right? If you're a cashier, or if you work fast food and you're at the counter taking orders, well, now they got iPads and they have tablets where people can just push their orders on there, replaced. So again, the Blacksmith Podcast exists so that our young men don't get priced out of the market, right? Don't get replaced by AI and stuff. Help invent technology that doesn't replace you, or don't get replaced by the technology that you're helping invent. All right, folks, Forge Going Cold, I need me a hammer. All right, I got shirts. If you want a shirt, you can pre-order a shirt. I can show them again. I have the dark blue, like what I'm wearing right now, and it has the logo of the Blacksmith on the back. Just send me an email to the blacksmithpodcast@gmail.com with how many shirts you want, what color, and your size. I have the green. Let me show them real quick. All right, so I've got the black. Let me see. Let me make this look cool. Drop. It was almost cool. Y'all know it was. Dark blue, gray, and green. And that's what it's on the back. So if you want a shirt, shoot me an email, theblacksmithpodcast.com. I'm sorry, theblacksmithpodcast@gmail.com. And with your size and the amount of shirts you want. And I will get those ordered for you. The Forge is going cold, ladies and gentlemen. Have a great week.